Hello and welcome to Pro Trader Strategies market commentary for Tuesday, December the 26th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get it on. I hope everybody had a great extended weekend. That's why we didn't have Monday, right? For a trading day. It is going to still be a quiet day in the markets because although we in the United States only take one day off for a bank holiday for Christmas, the rest of the European region, for the most part, is taking today off as well. We have an Italian bank holiday, Great Britain, Canadian, and German bank holidays today. So even pretty much just everybody across the board in Europe is taking an extra day. Good to be European, I guess. Anyway, that's about it for that. So on to the overall markets, we are going to see a little bit lighter volume, although crude oil is moving quite a bit higher today. Oh, one data point that I did miss on economic data point was Richmond manufacturing index came in at 20, expected to be 22. But as you can see, with crude oil moving higher today by about $1.31 right now, almost into that 60 handle. Tried to get up there today. It looks like it might actually make it there. And the reason why we're seeing this spike here is a lot of people are grabbing on to the fact that there's disruption happening in Libya. Some Libyan fraction or something like that. Some armed militants went out there and blew up a pipeline. And it is going to disrupt the flow of oil by 90,000 barrels a day. Libya produces about 900,000 barrels a day. So about a 10% production cut coming out of Libya. Now, if you remember, Libya and Nigeria are one of the two, or Libya being one of the two, Libya and Nigeria are the two basically countries that don't have limits according to OPEC. So they've gotten off that hook of limiting production. So all the rest of the OPEC members have to kind of stick by a production schedule. Libya and Nigeria do not have that same clause in their OPEC production limits. So they can produce as much as they want, but it's really only a 10% cut. But everybody grasping onto that disruption and moving crude oil higher. Also, people are talking about, hey, supplies coming back, and this disruption really could create more of, lack of supply throughout the world. But 90,000 barrels a day is really a drop in the bucket, to be quite honest. That being said, we're also seeing a lot of this oil. With the inventories going down, the oil is actually being refined. So those inventories are rising, but those aren't the headline numbers. And people are grabbing onto that and really pushing crude oil higher. So it's up quite a bit today. Gold futures moving higher as well, up $9, got back above that fib level, which isn't going to, like I've talked about this several times, this isn't going to act as a support and resistance like a normal Fibonacci would, because it's lining up with this point of control, which is where the most time and volume has been spent. Because it lines up there, it's really acting as a magnet. So it's going to kind of slice through that like butter, like we've seen back here. That wasn't acting much as a support and resistance that you can really trade off of necessarily. You can kind of trade it to want to come back to that level more so than having it create support and resistance once it gets above it, acting as support and things of that nature. So just keep that in mind. It's more of a magnet. But we have gotten above that, not helping out my short GLD position at all. I was looking for GLD to go down to around 1221 was a target I had on gold. So that might be out of the picture now. And I might cut my losses on that particular trade as of right now. All right, so I'm going to have to go through these as we go. This is an interesting, I think I've talked about this before. This is Long Island Iced Tea Corporation. They basically came out and talked about switching over, pivoting to some blockchain stuff and changing their name to Long Blockchain, and that caused this market to really spike quite a bit higher. On to gold futures. Like I mentioned, gold futures were, all my charts are all messed up. Gold futures are up. Let's talk about Bitcoin, blockchain, moving on to blockchain again. Bitcoin up quite a bit today, up $1,700 as you can see after that low we saw on Friday. The market has rebounded quite a bit since then. You know, I mean, you can say it rebounded since Friday's lows. This is one of the most volatile products I think I've ever seen, but Bitcoin futures up quite a bit today. Bonds up as well, as we're seeing a little bit of pullback in some of the equities, but as you can see with bonds up 20 basis points, we got the VIX back into double digits because we're seeing some of this negative or downside pressure in the equities. You can see the Dow Jones down about 32 points right now. It looks like it's a green bar, but that's because we are higher than where we opened on the day at this point. We've got the NASDAQ off by about 22 points, but well off the lows of the day. It did look like it was going to come down here today and test the value area high. Got pretty close to it. It's really kind of lining up with this top right here. So this is really the area that's going to act as support and resistance right there around 64.30. So that is the line in the sand for a support resistance. It's not going to be as much this value area high right now, but it will act, this whole area, this area of about 20 points is going to act as a support for any of the bulls. Now we've on to the E-mini S&Ps. E-mini S&Ps unchanged for all intents and purposes, right? I mean, we're only off by, you know, a quarter of a point, but the overall market's pretty quiet in here, almost no volume happening across the board in most of these markets. Now, one of the trades that I have added, and it is not NVIDIA, but I am looking at getting out of some of my NVIDIA, but I did add Apple to my portfolio. It just wanted to take advantage of some high implied volatility. Volatility kind of spiked. It dropped quite a bit on some news that the stores weren't doing as well over the holiday season, things of that nature. I think that people were still buying Apple phones and Apple watches and some of those other products. So I decided to take advantage of this with some selling some puts in there. You know, it came down and tested this 50-day moving average. So I think that that was a good test to the downside. I think we're still going to be in this range for at least until we start seeing earnings. And we do get the earnings right after this January expiration. So I stayed in the January with this, with the high implied volatility, was able to get down to the 162.5 strike. So well below all of this support area. You know, it's going to act as a support if it comes down and tests the 165 area. So pretty comfortable with these 162.5 calls, or sorry, 162.5 puts that I sold. So I went into the January, like I said, that it's going to expire in basically 24 days. Sold those January 162.5 calls, or sorry, 62.5 puts. Sold the 162.5 puts for 95 cents. I think I got a nice location on that, looking for a bit of a rebound after this little pullback, and going to look to take 50% of my max profit. A couple of other things I'm looking to get out of. I was looking to trade out of my NVIDIA. Looking in my margin account, I have on Verizon. I have on some short puts in there that are really close to 50% of my max profit, maybe even just slightly better. Squeezing everything out for a couple extra pennies at the end of the year here, trying to increase my overall yield at the end of the year. I have a tendency to do that when I go into December. It gets a little bit quieter, market settles down, and with those premium selling strategies, I like to capture a little bit more of that theta decay. So that's kind of what I'm doing right now. So I'm looking at getting out of NVDA. I'm also looking to get out of PayPal, and what else was there? UPS, and a few other ones that I'm just kind of keeping an eye on, that I'm really close on my 50% of max profit, maybe slightly more than that, and trying to squeeze out a couple extra pennies. So keep your eye out for that tomorrow. I'll talk about that if I get hit on any of those. But as of right now, the only thing that I've added or done to my account is added Apple to my margin account. Okay, so I hope everybody had a great extended weekend. That's about all I got for you guys today. Friday's webinar is going to be a really good one, especially if you have a lot of stock in your portfolio and you're kind of worried about protecting the downside. I'm going to show you how to set up. A lot of people go out there and buy puts to protect themselves to the downside. And I'm going to show you how to create a collar in there. Well, actually, a collar is that way, but with the hand signal, create a collar in a portfolio so that you're not increasing what you really paid for that stock. Because when you just go out and buy stock and then buy puts around that, you increase what you paid for that overall stock. So I'm going to show you how to kind of isolate that a little bit better than just buying that protection and increasing what you paid for it, which lowers your overall yield. All right, so check it out at protraderstrategies.com, and if you can't take that, take it easy.